Forex Focus brought to you by IG. Some really interesting price action being seen across a number of foreign currencies against the US dollar. We're seeing plenty of downside across the board here. We're looking at performance since mid-July, essentially the last 2 months. And what you've seen is several hundreds of pips being lost for the euro, for the pound, yen, especially Aussie, Canada, and Swiss franc here against the US dollar. And you might look at those percentage terms down, 5%, 6%, 7%, and say, man, that's not a lot to write home about. Remember that foreign currencies, the Forex market, move with relatively low volatility. They usually have an annual volatility between 5 and 15%. And that volatility value lets you know on an annual basis what's expected to move. If you've got a 10% volatility, that means that in a year's worth of trading, you're likely to be up or down 10%. And so with a 5 to 15% annual volatility in a lot of these Forex markets, down 5, 6, 7% in about 2 months is a big, big move, especially looking at that pound and yen down. I mean, the pound is down almost 10 cents to the US dollar, which again, if you're used to trading, high volatility stocks, might not feel like a lot. A move of 10 cents is a lot in 2 months here. And this has been a lot to do with US dollar strength relative to these other economies, US numbers, economic data looking better than especially China, Japan, and Australia, but also the UK and Eurozone, but also global fear has been heightening. Let's talk a little bit about that first piece, that relative strength as the pound. This is a pretty ugly chart the last couple of months, from above 130, now looking at 120 as the UK central bankers have paused their rate hikes because they're worried about the European economy slowing down the way that China and Japan have been the last several months. And you take a closer look at the Bank of England's statement and dissect one of their first points is the international economy, which if you've ever looked at central bank meeting statements before, there can be a lot can be deciphered through what they say, of course, but also the priority that they give it. And this international economy piece was one of the first pieces that they spoke to. And they said, yes, UK GDP has increased by 0.5% in Q2 here, but global GDP growth is 0.3%. And then you go to Euro area GDP increased by 0.1% and expected to contract in the next quarter. And then you have the US increased by 0.5%, some of the biggest of these projections that they laid out, and growth expected to increase further in Q3. So you're getting some of that relative strength, US versus UK and the Euro area, why you've started to see those two currencies fall. And also on the side of the US, the Fed sees these same projections that they're not only growing at a consistent rate, but could increase further in terms of those GDP growth rate numbers. And you have the majority of Fed members thinking that 5% or higher is where we'll be in 2024. A lot of people thought that they would hike up to near 5% and then cut down to 4% or lower immediately, but looking like potentially higher rates for longer when you're looking at the dot plot. And also listening to Fed Chair Powell, he said that there could be another hike on the table here still as the UK is pausing and China and Australia and Japan are looking to do anything they can to get a bounce back in their economy, potentially cuts, although Japan's already negative, so I don't know how much they can cut. And here's a bunch of stats just in terms of what currency is closest to its lows. Essentially, how much does the euro or pound or yen have to fall still to get to historical extremes? And we're looking at extremes since 2000. And take a look at the middle row there. The yen, only about 150 pips away from its lows against US dollar that we saw last year, that were, I believe, 30-year lows in the yen. We'll look at that in a second. But euro still has 1,000 pips that it could fall to get to those lows. Pound, even though it's already given up about 1,000 pips at 10 cents, that is in the last 2 months of action, could still fall another 1,700 pips to get down to its lows that they saw last year. Swiss franc and Canadian dollar and Australian dollar actually holding in relatively better in terms of distance from lows. Australian dollar, it has fallen significantly the last couple of months, but they've been lower in the last 20 years. Canadian dollar, like I say, actually being relatively strong. That might make sense given that it's North American currency there, closest ties potentially to the US's economy still doing well. And we'll finish here with this piece as a lot is being said about the huge fall in pound and the huge fall in euro. But keep in mind that Asian currencies already pretty much at collapse point. I mean, yen is within potentially a day or two of trading of those 30-year lows that we saw last year against USD. So it'll be really interesting to see how these foreign currencies that are either in collapse mode or on the verge of collapse shake out.